Hi traders, another episode of Technical Tuesday. I will be live in TradingView for any questions you may have. Let's get cracking. So we got the dollar obviously looking like it's looking a bit shaky. It's below, price is just currently below that 103.8 former resistance. Now it's turned into, was supposed to act a bit like support, but it's gone through their price. The next level I'd look at is that 21-day exponential moving average. That's very important. The RSI has obviously come off a bit from overbought. There was a tiny bit of negative divergence too, as we made a higher price than that high there, but the RSI didn't confirm that. If we were to see another bounce high, I'd be targeting that former high at around 104.885. Moving on to the S&P 500, we can see here that those Fibonacci levels have got just shy of that 3.8 area and had a bit of a bounce. Let's see if it can run into that 23.6 in the 21-day exponential moving average. I still think risk assets, a short the rallies approach is probably best in this environment, but we obviously have to watch the tape. The RSI has also bounced out, just touched that oversold region, and it's bouncing back up now. Same thing with Euro US dollar. We're having a bit of a rally off that 103.5 level. I've drawn in a little resistance line here at around 10, just shy of 105. We'll see what price does around there. That round number we could see that was quite sticky there when price previously broke through it. So we'll see if resistance becomes sticky too. And then above there, obviously the 21-day exponential moving average and the 23.6 fib level. The RSI actually also made some negative divergence, a lower price low, but not a lower low in terms of the momentum indicator. GBP US dollars having a strong rally this morning. We saw some really strong employment data out, high employment gains in terms of absolute numbers, and in those average earnings were much higher than expected. So wage price spiral, inflationary pressures are definitely one to watch. That we've rallied off that 122 area. We're getting back up to this 124 round number. I've drawn in a bit of a resistance line there. We'll see if we can breach through that. The RSI again, negative divergence coming out of oversold. Let's look at Euro GBP, a bit heavy as the pound's flying higher than the euro, and that's obviously led to a retracement here. We're back at this 200-day simple moving average. It's a key level. Let's see if price can push down another 39 pips to around that 0.84 round number, as well as that 50-day simple moving average. Moving on to US dollar JPY, we can see it's held that 21-day exponential moving average quite well. In terms of targets wise, I'd be looking to the upside. The 130 level would be key, and then above there, the former high around here at the 131.2 level. On the downside, I would say a breach below this 21-day exponential moving average. I'd be looking towards these lows here at around 127. The RSI still has some room to run on the upside though, so that's positive for the bulls. Aussie dollar flying higher again. We slipped below that 0.69 level. But now we're sort of making a nice retracement back through that key support yellow zone that I drew in there. And we're moving higher, potentially up to that 23.6 level, just under 0.71, and the 21-day exponential moving average. The RSI moved out of oversold. We're having a bit of a run here. And then I like to always look at AUD JPY because it's a key barometer for risk. And we can see here prices rallied quite strongly off that 50% Fibonacci retracement level. And then obviously we have the 50-day simple moving average just above that around 91. So it'll be interesting to see what happens there. I've drawn in this little horizontal line here on the RSI for where we saw some like resistance. The RSI still got some more room to run. So we'll have to see what happens if we pierce that 50-day simple moving average. Gold had a bit of a reversal. We saw here that it got down to a low of around 1786. Price now is up against that 1830 level in the 200-day simple moving average. And that's obviously a key support level, resistance level. And we're going to have to see what price does around there. It's got a bit of a doji candle at the moment, a bit of indecision from buyers and sellers. But yeah, this is one to watch. Gold's looking very interesting at the moment. And then lastly, finishing off with crude, we can see here there's resistance at around this 115 level. So we'll see what price does around there. The RSI looks to be rolling over a tad. The candle's kind of a doji, bearish doji. So we'll have to see what happens there. On the upside, if we break through that 115 level, the next level I'd be looking to target would be around 120, the round number. And then on the downside, I'd be looking towards that 110 level, the 50-day simple moving average. And below there, obviously, we've got that $100 mark. Thanks for listening to Technical Tuesdays today. I hope you found it useful, and I will see you all next week.